Welcome back to Goldix XRP, the channel where we break down everything happening in the world of XRP and crypto markets, so you always stay one step ahead. If you are new here, make sure you hit that subscribe button because we are constantly bringing you the latest news, analysis, and insights that matter to XRP holders and investors. Today, we have a story that is genuinely exciting, especially given how rough things have been across the broader crypto market lately. While almost every major crypto ETF has been bleeding out and losing capital at an alarming rate, XRP funds have been doing something completely different. They have been pulling in fresh money week after week, and the numbers are starting to tell a very compelling story. So let us get right into it and break down exactly what is happening, what the data is showing us, and what it could mean for XRP going forward. Let us start with the big picture here because context is everything. The broader cryptocurrency ETF market has been going through a really difficult stretch. Bitcoin ETFs, Ethereum ETFs, Solana ETFs, almost all of them have been seeing consistent outflows. Investors have been pulling money out, and the mood across the space has been cautious at best. When you look at the numbers, it is clear that confidence in the broader crypto market has taken a serious hit over the past several weeks. But right in the middle of all that negativity and uncertainty, something interesting is happening with XRP. The spot XRP ETFs are not just surviving this downturn, they are actually attracting new investors, and that is not something you can ignore. When everything around you is falling and you are still standing, that says something very real about investor confidence in a particular asset. According to data pulled from SoSo Value, the spot XRP exchange-traded funds brought in $7.44 million on Tuesday of last week alone. Then on Wednesday, they added another $1.19 million on top of that. And then on Friday, another $2.04 million came flowing in. Now Monday and Thursday were technically no-flow days, meaning there was zero reportable activity recorded on SoSo Value for those days. But here is the thing. Even with 2 days of no activity, the week still wrapped up with more than $10 million in total net inflows. That is a significant number, and it becomes even more impressive when you look at what every other major crypto ETF was doing during that same period. This was not a coincidence or a fluke. This is a pattern that has been building for weeks now. What makes this streak even more remarkable is that not a single day during this recent run has ended in the red for XRP ETFs. Think about that for a moment. Every single day that has seen any reportable flow has been positive. The last time the XRP ETFs actually recorded a negative day was back on June 3rd when they saw an outflow of $5.34 million. Since that date, it has been nothing but green. And in the current market environment, where nearly everything else is struggling, that kind of consistency is genuinely hard to find. Investors who are paying attention to fund flows know that this kind of sustained positive activity typically reflects something deeper than just short-term speculation. It suggests that a specific group of investors remains committed to XRP even when conditions get tough everywhere else. And the cumulative numbers tell an even bigger story. As a result of all these consistent inflows, the total net inflows for spot Ripple ETFs have now climbed to a new all-time high, surpassing $1.44 billion. That is not a small milestone. That is a massive number that reflects months of steady capital flowing into XRP-focused financial products. Now, to be fair and honest about it, these figures are nowhere near the peak excitement that we saw back in November when the XRP ETFs first launched. There was a period right after launch where the inflows were truly euphoric, with massive amounts of capital flooding in as investors rushed to get exposure. That initial wave has settled down, as it always does after a new product launches. But the key point is that even in these much more challenging conditions, the inflows have not turned negative. They have kept coming in steadily and consistently. Now let us zoom out and compare what XRP ETFs have been doing versus every other major crypto ETF right now, because the contrast is truly striking. The spot Bitcoin ETFs, which are generally considered the gold standard of the crypto ETF space, just extended their negative streak to 5 consecutive weeks in the red, 5 weeks straight of outflows. And last week specifically, investors pulled out another $315 million from Bitcoin ETFs. That is a staggering amount of capital leaving the space in a single week. The Ethereum ETFs were not doing much better either. Even though Ethereum had a strong Monday, the week still ended with nearly $15 million in outflows overall. Investors were taking money off the table despite what looked like a promising start to the week. The Solana ETFs were also in the red for a second consecutive week. Across the board, the story for most crypto ETFs right now is outflows, uncertainty, and declining investor confidence. There is one other fund worth mentioning in this conversation, and that is the Spot Hype ETFs. These funds actually continued their own positive streak last week, which is worth noting. But even the Hype ETFs only managed to bring in $5.87 million in net inflows. That sounds decent on its own, but when you hold it up next to XRP's more than $10 million for the same week, XRP still came out ahead. So even among the few bright spots in the current ETF landscape, XRP is leading the pack. That is a fact that deserves attention, especially from investors who are trying to figure out where smart money is actually flowing right now. The data does not lie, and the data is pointing toward XRP as one of the strongest performers in terms of sustained investor interest. Now let us talk about price, because the ETF inflow story and the price story are two very different things right now, and that contrast is worth understanding deeply. Even as XRP ETFs have been pulling in fresh capital week after week, the actual price of XRP has been under real pressure. The token dropped all the way down to $1.05 on June 4th and 5th, which represented the lowest point of the most recent market crash. To put that in perspective, XRP came dangerously close to falling below the $1 mark for the first time in nearly 2 years. That would have been a psychologically devastating moment for a lot of XRP holders, and it came closer to happening than most people would have liked. The $1 level is not just a number. It is a psychological anchor that carries a lot of weight for the community. The fact that XRP held above $1 during that crash actually matters quite a bit. Markets are heavily influenced by psychology, and the $1 level for XRP is one of those key thresholds that investors watch very closely. A break below that level could have triggered a wave of panic selling and stop-loss orders that might have pushed the price significantly lower in a very short amount of time. But it held, and since that low, XRP has climbed back up to $1.15 as of the time this information was published. That is not a massive recovery by any stretch, and the price is still well below where most long-term XRP holders would want it to be. But the fact that it bounced from that critical level and has started to reclaim some ground is at least a positive sign in an otherwise difficult environment. However, we need to be real with you here, because not everyone in the analyst community is convinced that the worst is behind us. In fact, some well-known crypto analysts have come out recently with some pretty sobering price targets for XRP in the near term. One analyst in particular, Ali Martinez, who is widely followed in the crypto space for his technical analysis, recently outlined potential price bottoms for Bitcoin, Ethereum, and XRP. For Ripple's assets specifically, Martinez suggested that XRP could still drop further and potentially find a bottom somewhere in the range of 70 cents to 90 cents. That would represent a significant additional decline from current levels and would break well below that important $1 psychological support that held during the most recent crash. If that kind of move were to happen, it would no doubt shake the confidence of a lot of shorter-term holders. But here is where things get really interesting, and this is the part that many XRP bulls are holding on to tightly right now. Even some of the analysts who are warning about potential further downside are simultaneously pointing to that potential dip as a massive buying opportunity rather than a reason to exit. Ali Martinez, the same analyst who outlined those lower price targets in the 70 to 90 cent range, has also been vocal about the bigger picture for XRP, and EGRAG Crypto, another well-respected voice in the XRP community, has been very clear about their long-term outlook. Both of these analysts envision a scenario where XRP, after completing any further downside it may have remaining, bounces back in a very big way and pushes toward new all-time highs in the range of $7 to $8 or potentially even higher than that. Think about what that kind of move would mean for anyone who accumulates XRP at current prices or lower. If you are buying in the $1 to $1.15 range right now, or potentially even lower if the price were to drop into that 70 to 90 cent zone that some analysts are watching, the potential upside toward $7 or $8 represents a return that would be difficult to find anywhere else. Obviously, crypto markets are unpredictable and no outcome is ever guaranteed. There are real risks involved, and anyone investing in XRP or any other cryptocurrency needs to understand that fully and do their own research before making any financial decisions. But the asymmetry between the potential downside and the potential upside is something that clearly resonates with the investors who are putting money into XRP ETFs right now, even as broader market conditions remain tough. And that brings us back to where we started, those ETF inflows. Because when you think about who is buying into XRP ETFs, you are mostly looking at institutional investors, professional money managers, and sophisticated retail investors who have done their homework. These are not people making impulsive decisions based on social media hype or short-term price moves. These are people who look at the data, assess the risk, and make calculated decisions about where they want to allocate capital. And right now, even in the face of falling prices and a difficult macro environment, these investors are choosing to put fresh money into XRP exposure. That tells you something important about how a meaningful segment of the investment community views XRP's longer-term potential relative to the current price levels. The story of XRP right now is really a tale of two realities existing at the same time. On one hand, the price has been struggling and remains well below levels that many holders would consider healthy. Analysts are warning that further downside may still be coming before a meaningful recovery takes hold. The broader crypto market is dealing with its own challenges, with Bitcoin and Ethereum both dealing with significant outflows from their ETF products and ongoing price pressure. On the other hand, the capital flowing into XRP-specific funds has been consistent and positive for an extended period. Cumulative inflows have hit a new record high, and long-term analysts are pointing toward the possibility of explosive upside once this difficult period runs its course. Both of these things are true simultaneously, and understanding that duality is key to having a clear-eyed view of where XRP stands right now. So what does all of this mean for you as someone who follows XRP and stays informed about what is happening in this space? The honest answer is that no one knows exactly how the next few weeks or months will play out for XRP's price. The market is unpredictable, conditions can change quickly, and there are always macro factors and unexpected events that can shift the narrative in either direction. What we do know is that institutional interest in XRP has not gone away. If anything, it has been quietly building even during one of the more challenging periods the market has seen in a while. The $1 level held as support during the most recent crash, which is at least a positive sign for near-term stability. And the long-term vision held by many experienced analysts remains very bullish. As always, make sure you stay informed, do your own research, manage your risk carefully, and never invest more than you are prepared to lose. Thank you so much for watching Goldix XRP. Like this video if it helped you, drop your thoughts in the comments below, and we will see you in the next one.